The US government has been investing in the metals and mining space, and now actually taking the unprecedented step of investing in equity positions in metals and mining companies, as well as a company in the tech space. What are some examples of this? What is the rationale? And how might you, as an investor, benefit from this? What are some examples of the US government's recent investments in the metals and mining space? Well, the first example that I'll talk about is MP Materials Corp. That's MP on the New York Stock Exchange. In July, MP Materials announced that it had entered into a transformational public-private partnership with the U.S. Department of Defense, now known as the Department of War, to dramatically accelerate the build-out of an end-to-end U.S. rare earth magnet supply chain and reduce foreign dependency. Now, this is an agreement that is multifaceted. It will include an equity position taken by the U.S. government. It also includes a package of loans for construction of a rare earth magnet facility. And it includes a price floor commitment and 10-year magnet offtake agreement with MP Materials and the U.S. government. So let's delve into a little bit of the details here. As part of the agreement, the Department of Defense agreed to purchase $400 million of a newly created series of the company's preferred stock, convertible into shares of the company's common stock, and a warrant permitting Department of Defense to purchase additional shares of the company's common stock. As a result of this strategic investment, the Department of Defense is positioned to become the company's largest shareholder. As well, the company has obtained a commitment letter from J.P. Morgan Chase and Goldman Sachs to provide $1 billion of financing for the costs of construction and development of the manufacturing facility. In addition, within 30 days, the company expects to receive the proceeds of a $150 million loan from the Department of Defense in connection with its plan to expand its heavy rare earth separation capabilities at its Mountain Pass mine in Southern California. Finally, the Department of Defense has entered into a 10-year agreement establishing a floor price commitment of $110 per kilogram for MP Materials neodymium praseodymium products stockpiled or sold, reducing vulnerability to non-market forces and ensuring stable and predictable cash flow with shared upside. For a period of 10 years following the construction of its processing facility, the Department of Defense has agreed to ensure that 100% of the magnets produced at that facility will be purchased by defense and commercial customers with shared upside. Now, MP Materials, as I said, operates the Mountain Pass rare earth mine, which is the second largest rare earth mine in the world and the largest outside of China. As well, it does have an existing rare earth magnet processing facility, but this will greatly ramp up production with an additional processing facility. And the company said it has yet to choose the location, but that should be coming up shortly. Now, why is this price floor part of this agreement, and why is that important? Well, the production of rare earth elements is dominated by China. China produces some 70% or so of the raw materials for rare earth elements, but actually dominates downstream processing even more strongly, producing about 90% of the finished products that contain rare earth elements. Given its dominant position, China could potentially flood the market with rare earths, and that could drive out production elsewhere at higher cost production facilities such as that Mountain Pass. Thus, guaranteeing a price floor helps support against the potential for the Mountain Pass mine to be driven out of production or at least be unprofitable. A second example of the U.S. government's recent investments, including equity positions, is with Lithium Americas Corp. That's LAC on the New York Stock Exchange and also LAC on the Toronto Stock Exchange. On October 1st, Lithium Americas announced a deal with the Department of Energy whereby it would restructure some pre-existing loans with the Department of Energy, but also grant the Department of Energy the right to acquire 5% of the company's stock and also 5% ownership of the Thacker Pass lithium project in Nevada, which is currently held in a joint venture with General Motors. The key provisions of the terms include the Department of Energy has agreed to defer $182 million of debt service over the first 5 years of the loan, and the Department of Energy will receive a 5% stake in the company through warrants to purchase common shares of the company at an exercise price of 1 cent per share, and a 5% economic stake in the Thacker Pass joint venture through warrants to purchase non-voting, non-transferable equity interest of the joint venture, also at an exercise price of 1 cent per share. The company will post an additional $120 million to the Department of Energy loan reserve accounts to be funded within 12 months of the Department of Energy advancing first draw. And General Motors will provide additional support to the project by amending its lithium offtake agreement with the joint venture to permit the joint venture to enter into additional third-party offtake agreements for certain remaining production volumes not forecasted to be purchased by General Motors. As I said, this is for the Thacker Pass project in Nevada. This is a very large project and would be a significant lithium producer and significant source of domestic lithium supply for the United States. And lithium is an important battery metal and particularly important for batteries for electric vehicles, which is why General Motors is involved. Ultimately, Thacker Pass, if everything's exercised, will be held 59% by Lithium Americas, which will continue to be the manager of the project, 36% by General Motors, and 5% of the Department of Energy. A third example of the U.S. government's recent investments in mining includes Trilogy Metals, Inc. That's TMQ on the New York Stock Exchange, or American Stock Exchange, as well as TMQ on the Toronto Stock Exchange. On October 6th, Trilogy Metals announced that the company, along with its partner South 32 Limited and Ambler Metals LLC, have entered into a binding letter agreement with the U.S. Department of War for an investment to advance exploration and development of the company's Upper Kobuk mineral projects in northern Alaska. These projects are held by Ambler Metals, which is a company's 50-50 joint venture with South 32. The Department of War will invest approximately $35.6 million to acquire an approximate 10% equity position in Trilogy Metals. Under the specific terms of the agreement, the Department of War intends to invest approximately $17.8 million in Trilogy Metals in exchange for just over 8.2 million units at a price of $2.17 per unit. Each unit consists of 1 common share of Trilogy Metals and 3/4 of a 10-year warrant. Each full warrant would be exercisable at an exercise price of 1 cent to acquire a share of Trilogy. The Department of War will also pay approximately $17.8 million to South 32 in exchange for just over 8.2 million shares of Trilogy Metals that South 32 currently holds. And also will receive a 10-year call option to acquire an additional almost 6.2 million shares of Trilogy Metals from South 32 at a price of 1 cent per share, exercisable following completion of construction of the Ambler Road, which would connect the mining projects to the existing road network. Also, as part of the agreement, the Department of War shall have the right to appoint one independent third-party director to the board of directors of Trilogy for a period of 3 years. And the proposed transaction also contemplates that the involved companies and the U.S. government will discuss in good faith a framework agreement to establish the basis on which this road can be permitted, financed, and constructed, unlocking the development of this Arctic region. Now, Trilogy's projects include multiple mineral deposits, and they are polymetallic, but the primary metal is copper. In addition to these investments in the metals and mining companies, the U.S. government has also invested in the tech space. Now, part of this is all connected. These metals and mining companies would produce metals, critical minerals that are needed for the technology space, for electronics, and development of chips and other technologies. In August, Intel Corporation, that's stock ticker INTC, announced an agreement with the U.S. government as well for an investment. The U.S. government had already been providing grants under the U.S. CHIPS and Science Act, but now that would be reformulated a bit to include equity position taken by the U.S. government. Specifically, the U.S. government has agreed to purchase 433.3 million primary shares of Intel common stock at a price of $20.47 per share. That would be equivalent to a 9.9% ownership stake in Intel. The government will also receive a 5-year warrant, exercisable at $20 per share, for an additional 5% of Intel's common shares. This is exercisable only if Intel ceases to own at least 51% of the foundry business. As well, in October, it was speculated, some rumors out there, that the U.S. government was looking to invest in quantum computing companies. Now, the government came out and kind of pushed this rumor aside a bit, but we'll see ultimately if this happens. What is the rationale behind the U.S. government's recent investments in the metals and mining space? Well, first, obviously, is looking to secure a supply chain of critical minerals. This may be domestic or in some cases in friendly countries, but the supply of many of these minerals and even the downstream processing of the metals products are dominated by a few countries in some cases, as we mentioned, with rare earths being dominated by China. And so the U.S. government is looking to lock up supply domestically of some of these minerals. Second, through the Trump administration, the government has been looking to increase domestic manufacturing and overall economic activity within the United States, depending less on foreign sources and foreign manufacturing. Thus, the investment, for example, in Intel. In particular, we live in a day and age with a bold future in technology, with artificial intelligence, as well as quantum computing and so on, where the U.S. government is looking to remain competitive in the global scheme of things. And finally, there are military applications of some of these technologies that require specialty metals. So the Department of Defense or Department of War now is involved to look to lock up some of the supply of things that are critical for some of their technologies. Is this increase in U.S. government investing in the metals and mining space likely to continue? I would definitely say yes. The U.S. International Development Finance Corporation recently announced that it was joining a $1.8 billion consortium to secure critical mineral supply chains and bolster U.S. economic growth and security. In joining this consortium, it is adding funds to an already existing fund that is managed by Orion Resource Partners and ADQ, an Abu Dhabi-based active sovereign investor with a focus on critical infrastructure and global supply chains. The DFC's mandate is primarily to invest abroad, so this is not likely to be used for mineral projects within the United States, but it will look to lock up global supplies of critical minerals in friendly countries that could potentially be imported to the United States. As well, it's been recently speculated that the U.S. government is looking to set up a $5 billion fund in conjunction with Orion Resource Partners to invest in metals and mining, and that could well focus within the United States or abroad. Even stretching beyond the U.S. government, but still within the U.S., we've seen some financial institutions also pledge to invest more in the United States in manufacturing, but also in the critical minerals space. Recently, J.P. Morgan Chase announced a $1.5 trillion U.S. investment pledge. It already had a $1 trillion pledge to invest inside the country, but this increased by another $500 million, their pledge. Jamie Dimon, the chairman and CEO of J.P. Morgan Chase, said it has become painfully clear that the United States has allowed itself to become too reliant on unreliable sources of critical minerals, products, and manufacturing, all of which are essential for our national security. Now, some have speculated that while this is a pledge, in theory, it's more to please the Trump administration and in expressing support of their efforts. And some are not so sure how much of this will ultimately get invested. But nonetheless, it does show some support for investing in the United States, and including the critical mineral space. While the U.S. government has been supporting critical minerals projects, both under the Biden administration with the CHIPS Act, as well as under the Trump administration, taking equity positions in companies is fairly new and is unprecedented in modern times for the U.S. government. Some would see this as fairly controversial. Should the government be taking equity positions? And as previously mentioned, one of these deals even includes the potential for a board seat on one of the companies to be appointed by the U.S. government. Other countries have at times, particularly through sovereign wealth funds, invested in the metals and mining space. The government of Qatar, through their sovereign wealth fund, recently took a position in Ivanhoe mines. But it is definitely unusual for the U.S. government and unusual for Western countries in modern times to do so. What are your thoughts? Is this controversial, or do you just see it as business as usual and part of the U.S. government's support of domestic supply chains? Please leave a comment below. We could also potentially see some controversy in that some of these companies, while they may have projects in the United States, they're actually headquartered elsewhere, particularly in Canada. And Canada has at times blocked foreign takeovers or significant investments in critical minerals projects or companies that are based in Canada. We've seen that in recent times, even with majors like Teck Resources. However, recently, Canada's Energy Minister, Tim Hodgson, said that he was not opposed to these equity stakes being taken by the Trump administration. The federal government of Canada has rules under the Investment Canada Act for acquisitions by state-owned entities, and Canada's industry minister has said the government will evaluate deals on a case-by-case basis. But Hodgson has said that U.S. stakes are small minority investments in firms with U.S. projects. He said, and to quote, "The fact that an ally of ours chooses to make an equity investment into a Canadian company whose sole asset is in the United States, I don't think that bothers us at this time." I think that's capitalism in action. If they're interested in doing that, that's up to them. how might you, as an investor, benefit from the ongoing investments by the U.S. government in the metals and mining space? Well, there are some companies that you might take a look at. I'm not necessarily making a recommendation here, but this is brainstorming a bit of some of the other companies out there with critical minerals projects. One that the U.S. government has already speculated to be looking at investing in is critical metals. That's CRML on the NASDAQ. Critical Metals owns the Tanbreeze rare earths project in southern Greenland. This is one of the largest known rare earths deposits globally. And Critical Metals recently consolidated ownership up to 92.5% of the project, giving it near control. One speculation is that there are discussions involving the conversion of a $50 million government grant to the company, which it applied for in June, instead into an equity position by the U.S. government. The company also has a $120 million loan being lined up by the U.S. Export-Import Bank. That was also announced in June. Other companies that may be on the list that some investors are putting out there as potentially of interest for an equity investment by the U.S. government include USA Rare Earth Inc., that's USAR on the NASDAQ. They have a rare earths project in Texas. As well, they have downstream processing facilities. As well, other companies include American Resources, which is AREC, United States Antimony, USAMY, which has the only current U.S. producer of antimony, which is a key element for munitions, and NioCorp Developments, the stock ticker NB, whose rare earths project is slated to come online in 2029. As well, another company that has a significant project of interest in the United States is Northern Dynasty Minerals, that has the stock ticker NAK on the New York Stock Exchange American, as well it has the ticker NDM on the Toronto Stock Exchange. Northern Dynasty has the huge Pebble copper, gold, silver project in Alaska. This is a massive deposit that's been known for quite some time, but has a bit of controversy around it, as it's been blocked at times by regulators because it is in an area where people are concerned about how a mine would impact the salmon fisheries. Thank you for watching. If you found this video informative and interesting and helpful, please leave a like and a comment below. And please subscribe to receive our videos going forward. We will continue to talk about metals, mining, and the investment space. My name is Tim Lee. I'm a geologist and mining equity research analyst, and I look forward to seeing you on the next video.